the sooner the better, because those are all trust-based relationships. Get your team and make sure you have the advisors that you trust, and delegate to them as much as you can, because they're not going to be a specialist in doing this.
From humble beginnings, Insurance Claim HQ has grown to one of the largest property casualty firms in the country. We didn't do it alone, and you shouldn't either. Every week, we're talking to claims professionals and top experts from all over, all to help you grow your business and make you stronger. Let's level up together. I'm Galen Hare. Welcome to the Level Up Claims Podcast. I'm Galen Hare. If you're serious about winning in this industry, June 12th of 2026 matters. The Level Up Claims Summit brings together serious operators who want to sharpen their edge and separate from the pack. No fluff, no vendor circus, just real conversations with people who are actually moving this industry forward. Seats are intentionally limited. We keep the room exclusive. Once the room is full, registration closes. If you're ready to compete at a higher level, don't wait. Go to levelupclaim.com and request your seat now. I'll see you on June 12th. Many business owners feel stuck chasing revenue without really knowing the true potential of their company. They might be successful on paper, but leave value on the table because they don't know how to measure it or leverage it. Today's guest, Rafael Pinho, co-founder and CFO of TD Pine Advisors, helps founders turn complex numbers into clear strategies for growth, valuation, success, and exit. Rafael will show you why you're sitting on a gold mine and how you can prove it. Let's welcome Rafael. Rafael, thank you so much for joining us.
Thanks for having me.
All right, so I am super excited to talk about today's subject because it has to do with finding value within your company. But before we do that, talk to me a little bit about how we got to where you are today. I know you've been in finance, it sounds like most of your life, but what made you decide to kind of start TD Pine Advisors and help these business owners realize the true value of their companies?
That's a great question. Thanks for asking. This wasn't my idea. I'm not about stealing others' ideas. So I have a business partner, Brendan Moon, who had a terrible personal experience with lack of planning in his own family business. So he basically experienced quadrupling the business size, and just to realize that without a plan, that doesn't help much. The business unfortunately went into disarray because of a life event. And guess what? During that journey, he actually acquired two businesses in the same situation. So even with that, even seeing it, he couldn't work his way out within the family. There's a story behind it. He tried, but anyway, he realized that's a thing, and happens more often than not. So with that, he started his own consulting business, and a couple months into it, he needed some finance work done. That's when we met, and he initially retained me to help, but we suddenly realized that working together would be way more powerful as you add operations and finance together. He's more of a biz dev, ops type of guy. I'm obviously all finance, and we said, well, when these two work together hand in hand, it's amazing what happens. And I witnessed myself that thing happen in my past, in my career experiences. So with that, plus the notion that at this stage of my career, I'd rather make your average business owners a millionaire as opposed to making multimillionaires billionaires, which I already did. Check the box. I was like, okay, so let's do this. Let's help small and mid-sized business owners make that leap and make their business more valuable and have options. So with all that, that's how TD Pine was born.
That's awesome. And not necessarily a surprise that was kind of your path. I think so many people become entrepreneurs because of that feeling. They're sick and tired of grinding for someone else's benefit. But the problem is they then have this company, and because they're not multimillionaires to billionaires, right, yet, they don't necessarily know a few things. They don't know how to value their company. They don't know what kind of exit planning really looks like. And that's where people like you come in, right? But I think we've got to do some vocabulary first before we jump into that. So what is transferable value?
It's a great question. It's the sense and the notion that one thing is how much the business is worth on paper, and on a spreadsheet. And on a spreadsheet, I can make any company be worth as much as you want. But there's a difference between that and what just a business is worth in the marketplace and what a buyer would pay for that specific business, especially at this demographic where a lot of the value of the business is depending on the owner and on owner dependence. So, with that in mind, you got to subtract from the value of the business the impact of that owner leaving and not having a replacement and a management in place to replace itself. So, transferable value is the difference between full market value and the actual attainable value in a transaction world where that owner dependence is present. You know, so that's how we define it. And one of the quests that we do here at TD Pine, one of the key levers that we try to pull is make sure that that gap is reduced as much as possible.
Yeah, that makes a lot of sense. I think at least. But, I'm still learning some of this stuff. So let's talk about it because I think what happens so often is people spend years and years and years growing a business and then they finally decide to get out and they choose kind of this arbitrary value that they think their company is worth and
Yes.
they negotiate from there, which often goes nowhere. Or, and this is the worst one, but you kind of alluded to it earlier, something terrible happens and they kind of sell for whatever they can because they just need to get out of their company.
Yes.
Neither one of those is good for the founder, right? They're either selling it way too low or they're stuck in the business longer than they want to. So I think my question is, how do we start? What's our approach here? So, first of all, I guess let's start with this. A lot of people build top line growth, they build more revenue coming in, but they don't worry about what the actual value of the company is. How common is that? And what kind of mindset should you start to change, or should you change at all if you're currently just chasing top line growth?
It's way more common than you think. And I'm going to start asking you a question. Do you
Okay,
own any stocks in your investment portfolio?
for sure.
If I'd ask you right now, how much do you own in stocks? Would you be able to tell me with a flip of a button
Yeah,
on your cell
absolutely.
phone, right?
Yep.
Can you do that with a privately owned business?
Takes a few clicks of a button for mine, but no, not for others.
Yeah, so that's the thing. People got used to doing that and flipping their phones and knowing how much they own in stock. And they completely ignore the fact that by far the biggest asset, potential asset in their personal portfolio, they have no idea how much it's worth. They never get it checked. They never hire anyone to check that for them. And it's amazing that I see a lot of financial planners out there planning the future of these people without considering that asset as an important asset in the portfolio, important enough to have it checked from time to time. It doesn't need to be with a flip of a button. It doesn't need to be every day, like we do stocks, because that's also crazy. But that's another conversation. Uh, they should check it at least, I don't know, yearly or every other year, but they don't, and it leads to those suboptimal outcomes that you alluded to. Because what happens is that those arbitrary values that you alluded to, they happen a lot, and they're normally based off how much do I have in my personal portfolio. Going back to it's all related. How much do I need to retire? And the gap is normally okay. If the gap is $5 million, that's the value of my business. That's how much I need to sell my business for. It has absolutely no correlation whatsoever with how much my business is worth. It's just the number that they need. Now, our job is first to have a reality shock. This number has nothing to do with what you need. This number is a number that has to do with what your business is worth in the marketplace. So start having a very objective valuation. So that's the absolute first step when we are having a conversation with a business owner. Let's have your business value. Let's have an idea, and let's have an honest conversation about how much it's real. It is really valued. Because one thing is they own a cash flow, and sometimes what they own is a paycheck. I say that's not a business, that's a job that they own. It's not a business, it's not an asset that they can sell. Then
Yeah.
the magic is turning that job into an asset. That's the whole process.
Yeah, and that's obviously where it becomes a problem, right? But for people that have kind of gotten themselves out of the business, so to speak. They're not really doing much other than running, they're not necessarily running the day to day. Still valuing it is a problem, right? Figuring out how to value it. So let's start with this. Let's talk about the investors. What investors are looking for. What are three things that investors really look for?
There are the three biggest pillars of value, if we could super simplify it. Predictability. Any investor, anyone with money, want predictability on the return. So they want to make sure that that business is fairly predictable. Uh, they want growth because if I'm investing, and this is equity in an equity world where I'm investing for the equity portion of things, I want equity to grow as much as I want equity to grow when I invest in a listed stock. So I want growth, right? So predictability, growth, and I also want to mitigate my risks. I also want to make sure that that business is proven against headwinds, proven against the ups and downs of the market. So I want that scalability. I want those systems.
So when you say the ups and downs of the market, like proven against, are you talking about like eventualities, disasters, COVID type things, or are you talking about competitors?
I'm talking about just changing landscapes, really, not catastrophe-like events, because catastrophic events, we all know by now, we cannot predict them. When they happen, they're gonna pretty much hurt everybody. However, if you are better prepared with your systems, if you have shored up your balance sheet, there are things you can do, right, to make I'm not saying you're gonna have no impact, but you're gonna, one, survive, two, you're gonna fare reasonably well in that scenario. And if you're able to do that, well, and I'm an investor and I see a business that has those capabilities, guess which business is worth more? That business or one that I know it's probably gonna be swept under the rug as soon as a crisis hits because they're not prepared, you know?
Yeah. Yeah. No, I think that's exactly right. And if they don't have those things kind of ready to go, it it harms like the investor's evaluation of what that company could possibly be worth. So I guess how do we quantify the true worth of a company in actual like quantifiable actionable terms?
In the most closest possible layman terms I can make is in the words of uh, Graham, founder of valuation in the past, is any asset in life, if it's a financial asset, it should be worth the present value of its future cash flows. That sounds fancy, so let's break it down. Does it make money? Will we continue to make money and growing money into the future? If I say yes to the three of those, it has value, right? Now, that's the market value of that asset. Now,
Okay.
in our demographic here, we have to distill down another level. Can it run itself alone? Does it need business owner present? Yes or no? Does it has the management bottom line? And is it too concentrated? So there are other nuances that we need to understand because it's very common. Oh, I'm great. I have this client that loves me. He's 60% of the business. I'm like, that's a problem. What if that client goes away for whatever reason? No, that's not a problem. Yes, that's a problem. So there's a list of questions and things that we check to adjust that value. So we start from market value. This sector, this portion of the economy trades for an X times multiple of its cash flow. Fine, but that's just a starting point. Then we just have to dig deeper. Let me give you a real life example. We have a
Okay.
client, and I love you, by the way. I love that client, and I cannot say the name. I'm sorry, under NDA here. But as he came to us, he had a very valuable cash flow, but the business was worth zero. And I had to have, what are you talking about? I'm like, you know what? Your operating agreement renders your business value zero. Goes, Alpha, I thought you were this spreadsheet guy, not an attorney. Why do you care about checking paperwork and documentation? I'm like, well, I'm just thinking as an investor. That's the first thing an investor is going to do as they engage in diligence. And guess what? The operating agreement had some flaws that would impede a transaction. I cannot go in further detail there, but enough to say, regardless of how big the cash flow was, that operating agreement was a deal breaker. And it was my job to tell you, we could work on value, revenue, cash flow, do all these things, but this needs to be fixed and needs to be fixed today. So we engage with an attorney. We are ready from the other side of fixing that. So
Well,
this is
Raphael, you kind of left the whole audience hanging. I don't want you to disclose the client or anything, but you got to give us a couple of examples of operating agreement issues that render your company valueless.
all right. Let's say you have a minority majority situation here where minority can block anything,
Hmm.
including any major decision in the business. And guess why that company had that operating agreement? Because back in the day, when it was created in a garage, I don't care about my operating agreement. Let's just use LegalZoom and do it, right?
Right.
And that gets forgotten. This is 20 years afterwards. Uh, Person didn't even remember they had an operating agreement when I asked about it.
Huh.
So these are the things that it just tells me one thing: selling a business is an event, especially in this world that we are talking about, this demographic, something that they might do once in life. Best case scenario, twice or even three times. I'm going to ask you a question. If there's a thing that you just did three times in your whole lifetime, are you going to be a specialist in it? Are you going to remember every detail, especially a complex thing like selling a business? Would you have all the box that needs to be checked top of your mind? You know,
I hope not, but depends on how traumatic it was, I suppose.
Yeah, well, funny you mentioned that. In that specific case, that client is one of those who already sold and learned a few lessons, but not that lesson. Guess what? He learned a few lessons and he did it way better second time, but not all. So that's why I tell our people, it doesn't need to be me or you. They need to get strong people at their corner. They need to get a strong team to execute on this, and the sooner the better, because those are all trust based relationships. So you need to trust these people. You're trusting them with your biggest asset. Going back to our beginning of our conversation, so get your team and make sure you have the advisors that you trust, and delegate to them as much as you can because they're not going to be a specialist in doing this.
No. No, of course not, and they shouldn't be, right? And I think that's the point, which is why we're here, but to your point, that operating agreement's a great example of something that when we're setting up the company, we don't really think about because it didn't matter, and now even a 1% owner can block anything the company does, which makes no investor interested in coming in, especially if they have any interest in assuming operational control, right?
I'm gonna give you you're absolutely right, and let me give you another real life example of operating agreements. When our business had zero revenue, we created an operating agreement that has about 50 pages.
Hmm.
People will go, "Are you nuts?" I'm like, "No, that was by far and still to date between me and my partner." And just for context, we had known each other for less than a month before we decided to put our futures in this joint venture.
Wow.
So you can
Gutsy.
imagine how little we knew each other, right? And
Yeah.
then guess what? It was one of the most enriching conversations we've ever had to date because we sat for a few hours. It took a few hours and we went item by item, do's and don'ts, can and can'ts, what ifs. We had a lot of what ifs there. We also took one of the worst decisions a business owner starting with a partner can make, which we are 50-50, which is a classic mistake. But I admit it, we have it because back then there was no other way of solving for the fact that Brennan already had a business that was going on, existing. He had revenue, he had clients, he was going. I was starting from scratch, but I had a lot to contribute. So we made a decision, you know what? There's no other way. This has to be 50-50. And for 50-50, we had all sorts of scenarios of what could be wrongs baked into that. So it's a little bit crazy that it became that big, but yep. Sometimes that's what you got to do.
Yeah, that approach to that meeting, that must have been so interesting. So did you each separately brainstorm to come up with these questions and these ideas? Or did you have a facilitator help you? Was there some kind of textbook or something that led you through that?
If I would redo it today, I'd probably have a facilitator. We didn't. We hired an attorney to draft it with our initial ideas, and that was sort of a working meeting discussing that draft, but it led to all sorts of deeper and deeper levels of conversation. I remember it was a very tough conversation. We almost gave up a couple times, but we just said, nope, we got to get this done. Let's get going. We had some very hard conversations, very tough conversations. I'm glad we did, because right now there are when we had a couple of instances where we just went back and said, well, this is what we decided, and this is why we discussed back then. Are we on the same page? Absolutely. Move on. As opposed to, oops, we didn't foresee that this could happen, right? So I'm glad we did. But I would absolutely recommend have some facilitator, because it can get tense. We were blessed. We like each other. We do well together, so we were able to do this through. I wouldn't recommend it to do alone as we did.
Oh, yeah, it's very hard. It's a hard thing to do anyway, regardless of whether you like each other or not. If you don't like each other, you have to question why you're going into business. But, they better have a lot to offer. So let's talk about this. If I'm sitting listening to this right now and I own a business, what are some insights that I can apply immediately in my professional life to try to get myself on the right track so when I exit, I'm in a better shape?
Take 2 weeks vacation.
Unexpected
If
answer.
if
Go
by
ahead.
the time if by the time you are back, the business is unscattered, it seems like nothing happened, you're on the right track. If the business is on fire, if your phone didn't stop ringing, if the email is completely unreadable with 300 messages, ranging from, "Oh, we need to buy more coffee," to, "This client is having this massive crisis." Well, there's a lot of work. So, uh, this is like, at the, say, couple $1 million to $30 million level, 50, I would dare to say, I've seen it happen. No, I cannot
Mm.
take a couple weeks vacation, so you got a massive problem of needing to delegate. And probably the second best on that line is, yeah, have someone that you really trust, form sort of a board of advisors, and be ready to have tough conversations. Be
Huh.
ready to let go of control, and be ready to understand that delegating is about compromising with the fact that other people are not going to do what you do the same way you do it. Doesn't mean that your client is not going to like it, but you're going to have to say, yes, okay, I'm okay with that, because that frees me up to be that strategist, to be a shareholder, as opposed to, the good old work on the business other than in the business type deal.
Yeah. I mean, it feels like people were saying that, geez, almost 2 decades ago now, and they're still saying it because it's still true. Um, Lots of people do not spend any time working on the business because they're stuck working in the business, and that sucks. It's really hard for folks. Um, all right. So we've talked a little bit about all of that. I guess my final, maybe final, probably final question is, let's talk about data collection. How can data help us reduce uncertainty for founder-led businesses in this world? What kind of data should we be collecting, and what should we be doing with that data?
Absolutely great question. You'd be amazed by how big of a business I already found that was running basically on QuickBooks. QuickBooks was used as the ERP, quote unquote, on the system, on the business. QuickBooks is great. No offense into it, but it's not designed, or is not the best tool to manage the business. That said, that's the first piece of data that I've seen time and again people just ignore. They just think that accounting is this tool to, to record things and then hand to your CPA to file your taxes once a year. So and the data is there. So I'm not asking you, although again I could go on and on about all sorts of data. Let's go and drill down by recurring clients and geographic and type or line item. We could make it as this answer as complex as we would, but start with the basics. Just look at their
Yeah.
financials; they're already there, and try to ask some intelligent questions there. Try to ask about your margin. I've time and again, I get new clients onboarding, and I look just this morning. I looked at one. Um, the COGS line, cost of goods sold, is zero. The business has only expenses. So I'm like, okay, let's educate them on the basics. You should separate between cost of serving your clients as opposed to discretionary expenses in the business. Let's start doing those. So that's just the most basic data collection that I could take, is make sure you have clean books. And I'm not talking clean books as in a transaction clean books. I'm talking clean books that you can work with, that you can make decisions based out of. Now, again, I don't want to. This is so basic, right? But it's so often overlooked. Maybe you want to do take it a little step further. At least drill down on your revenue as much as you can. Really understand clients, how recurring they are. Are your clients profitable? You'd be amazed by how many businesses. Oh, this client is great. Okay, what's your net margin on that client? Have you done that math? They normally haven't, and in many instances, they're big on the revenue front, but terrible on the profitability front. And there's that illusion that revenue is profit when it's not.
Yeah. Yeah, I'm amazed at how many contractors make a lot of money in terms of revenue, but really have no profit, just because they can't control their costs. It's wild. Rafael, we are pretty much at the end of our time. So before we go, I do have to ask you, what does it mean to you to level up?
Level up means really looking at being a true leader of a business. And the job of a true leader is work itself out of a job. So if you're able to do that, if you're able to have the humility to admit that some other people may be younger, may be just different in personality, he's going to do the stuff that you are obsessing about doing and controlling on your own, and let go of that control and delegate, you're gonna experience being at a completely different level.
Uh,
Higher. Oh, but here's a financial guy telling me to spend money. Absolutely, you're not gonna grow your business unless you spend money. Hire the advisors, hire the support, hire everything you need to grow your business, because they are all out there, as opposed to just being hanging tight, sitting onto the balance of the bank account and thinking, having that illusion that money sitting there is wealth when it isn't.
only hire those people if you're going to make the changes, though. I see a lot of people spend the money and then they're scared of the change.
Yeah.
Um,
Wow. Yeah. Been there.
unfortunately, Rafael, you've been amazing. You've been so generous with your time, and we appreciate you so much.
Thank you so much. You have a wonderful rest of your day, and I'll be around whenever you guys want to talk more.
I'd like to thank Rafael for joining us on the show. I mean, he really did say it best. A great leader works themselves out of a job. Do you have the right data? Are you making the right decisions? And do you truly understand the finances of your company? Because if you don't, it's going to be very, very hard to leave that job you have. And it's going to be very, very difficult to transition into being the leader that I know you can be. Follow us on Apple, Spotify, or your favorite podcast platform. Subscribe to the show if you want more conversations like this. And if you're serious about operating at a higher level, join us June 12th at the Level Up Claim Summit. Limited seats, exclusive room. Request your invitation at levelupclaim.com.